everyone, and welcome to MetaStock's weekly market roundup. My name is Hunter Smith. I'm very excited to be spending the next half hour or so with you and covering what happened this last week in the market. This is going to be a session that is geared a little bit more towards international markets. And I'm excited to be joined today by Mr. Gary Burton, who is going to be covering some of his thoughts on the market and what's happening and maybe some pressing issues that have been affecting market conditions, as well as some thoughts in the week ahead. Keep in mind, as this is a MetaStock presentation, we are going to be covering some different charts and some different indicators, etc. These should not be taken as direct trading advice. We're not going to be held liable for any trading decisions based off of the charts that we show you today. That's just the boring legal stuff. Now to the fun stuff. Gary, can you hear me okay?
Yes, Hunter.
Welcome, Gary. I'm excited to have you here. Gary has been in the business for a very, very long time. He's a contributor to Refinitiv. He created the Haguro method that we actually have within MetaStock. Gary, you do many, many things for us, and we're very appreciative. How are you doing today?
Very good, thank you. Very good. Relieved, I think, that the market has ended reasonably positive this week, but yeah, I think it's been a good week.
Yeah, and just kind of getting straight into it, it's been a little bit of a hectic time. I've read a few things saying that possible ease in Brexit, as well as possible trade war issues are getting resolved, or at least partially resolved. What do you think caused the markets to do what they did this week?
Well, that's true. So we saw a window open in Brexit last night where the European negotiators can actually start to negotiate now with Britain, and some of it will be, unfortunately, some of it will be secretive, but it will get done. So I think that's been a bit of a relief there. I think the market's really trying to believe that there is upside in all of this. So we haven't seen dramatic sell-offs like we saw in major events like GFCs and those sort of events. But here we are, the market's trying to believe that we have upside in here. We can see it in the indexes on a global basis where we're simply trading into consolidation areas and willing, I think, more willing to be trading to the higher side than take a bearish view.
Yeah, and that's that the market does seem to believe, with these two very large events kind of looming over. There's been a lot of indecision in the market, and it's been difficult for traders. But in the U.S., for U.S. traders, sometimes it's very, very easy to say, well, this is Brexit. This is thousands of miles away. This is, not going to affect us as much. But really, these types of things, the U.S.-China trade war, Brexit, these things are looming over all markets. Which markets do you feel that this affects the most outside of UK, US, and China?
Well, there's different events around the world. If you look in Asia, for instance, the Hong Kong, the protests and riots in Hong Kong certainly putting a lot of pressure on their indices over there, and they're essentially entered into a consolidation area as well. Haven't sold off as dramatically as they could, but certainly entered into a consolidation. So I apologize if we say trade war consistently during this chat, but that is really the biggest issue on a global basis, certainly around this part of the world as well. Brexit will come and go. They believe that Hong Kong will come and go, but the trade negotiations between the US and China is such a big ticket now that we can see all markets really moving around on any sort of news that comes out around that, including today, where there's been press statements this morning, and we've seen indices sell off a little bit into the close. Saw gold market rally into the close this afternoon, and it's really quite sensitive to this trade negotiations going on.
Yeah, and one of the things that I was reading is kind of a big date that's coming up. I believe it is Tuesday, which is kind of a deadline that I believe President Trump set, where he's actually looking at raising tariffs from 25% to 30% on
Yeah.
$250 billion worth of Chinese products.
Yes.
So that my understanding of this, and maybe you can shed a little bit more light, is that by that date they're hoping to have some sort of partial agreement at least.
Yeah, the market was hoping that this current press conferences going on at the moment would shed some light on that. Now, there's been a little bit of conflicting reports saying that yes, they will basically delay those tariffs as negotiations continue. The real risk in all of this, if you like, is not so much the day-to-day meetings, but how this is affecting global growth. And we're seeing a continued slow in Chinese growth at the moment. We're seeing everyone else's, and even in this part of the world, Australia, we're seeing really a sideways movement in our underlying growth as well. Our market is not willing to sort of trade out into new highs at the moment, as the US market has, but I think that's really the bigger picture, is what sort of damage is being done. Excuse me, what sort of damage is being done to global trade.
Yeah, I really couldn't agree with you more. And to show that a little bit, I'd love to get into some charts, if that's okay with
Sure.
you.
Sure.
You gave me a couple of charts to look at here before, some broad market charts.
Yeah.
What would you like to look at first?
Well, the currencies, what we saw overnight was a significant risk on in currencies. We saw the euro, the Australian dollar, and the euro rally a little last night, and the pound as well on the news. We saw big moves in the FTSE last night in equities. But if we take a look around this part of the world, the Australian dollar is one of the most liquid currencies traded. Currently, we can see here what I like about this chart at the moment. A couple of things I've got. This is basic candle chart. It's got a 20-period simple moving average on there, and the MACD showing at the bottom with a relative strength showing at the top. Now, clearly, the Australian dollar has been in a downtrend. Now, this interesting that a number of economists came out only 6-9 months ago and said the Australian dollar would have a floor of 70 cents because of our resources going into China. That was really the value of the Australian dollar based on our exports. So that's been discounted now. We can see that the dollar's trading down, well down below 70, and looks like it's heading a little lower. What I like about this chart at the moment is it's starting to put in a little bit of a base here. So we can see around this 67.90, been down below as 67.50 last couple of days, but it's starting to put in a little bit of support here at these levels. So wouldn't be surprised if we saw a retest around the 70 cent mark just to test that breakdown area in the next couple of weeks. So you can see also that the relative strength has remained down below 50. This is not a great sign for upside momentum. So we'd really be looking for the short trade on any sort of retest.
Yeah, it looks like here it really is testing that floor. Obviously, we have the RSI at the top here. This is actually currently a weekly chart, and you see a lot of very, very gradual downward movement here.
Yeah.
And this is, let's see, this is going back to about 2016.
Yes.
With this movement. Early 2018, we really started that down move.
Yeah, that 70 cent area was a big number to go through just last few months. That was really that caught a lot of people by surprise, because the consensus amongst economists was that level would be held going forward.
Well, and if we look at a weekly chart here, right around May, June, July, it really just kind of hung out around that 70 cent mark before really having a strong move downwards. Let's go ahead and take a look at a daily chart here.
So why I would expect some form of retest up around the 70 cent mark, currently right on the right-hand edge of the daily chart, we can see that the relative strength on a daily basis is now starting to move over 50. And I like the relative strength because you can look at it like a trending indicator. So the relative strength is just put in a little higher low. just a couple of days ago, in line with the price action on the chart. And we can also see that the MACD has given a soft swing buy signal where the faster average has crossed the slower there down below. So we've got a crossover on the MACD, which is good. And we've got a slightly higher low in the price action as of yesterday. So, and an outside bar as well, the second bar in yesterday, outside range, always, and an up and close towards the high of that range. So good sign for follow through when you see that type of price action in there. So I'd be looking at some form of attempt to really retest back up around the 68.5, 69, and possibly even the 70 level.
Yeah, I was going to ask you if you see any, if you see the it running long, if it passes through this 69 level, this 68 and a half, because it seems like this was kind of an old support for it, that it's bounced between 68 and a half and 70.
Yes, yeah, that's right. So the currency will be really more dependent on, again, this US-China trade deal, because it takes a lot of uncertainty away from our exports, and we're really just an export-driven economy. The Australian dollar is based around that, so we look at our iron ore and our coal exports into China, and the strength, and that really affects our underlying economy. So we see strength or weakness in the Australian dollar based on that.
Okay, wonderful. Next one, another good example here is the ASX 200. Did you want to look at that chart?
Yeah, sure.
It's going to open up that. I'll go ahead and put it on a weekly for you to start off with. Okay.
Yeah, so we can see that recent high about 8-10 weeks ago up there, that was really took out just the high that we saw in 2007, and with immediate rejection. So our market hasn't performed in line with, say, the US market, for example. We've really lagged behind in our valuations. So we've seen it simply retest the 6,830 odd level, and then quick rejection, and we're at risk now just on the right hand side there of putting in a lower high. Now this our market is clearly focused on US trade negotiations, and it does move around on the back of movements in the US and other global markets. But we're seeing now a very strong down week last week and some form of recovery, but we're still sitting under the 20-period average there. Now, what I don't like about our market at the moment is we're starting to roll over. We can see the MACD is starting to roll over, and we're starting to see the relative strength also head back towards the 50 level. This needs more work, of course. We could easily see the higher low set off last week's low and go out to new highs, but at the moment, consolidation seems to rule here.
Yeah, and this rollover, setting a high here, looks like the week of 8-2, and then that rapid sell-off, and it actually tried to start going back up, and it just didn't have the strength there. So I think that there is definitely cause for concern, especially with the RSI, and more importantly, the MACD here, because as you look back in time, the MACD's been very, very indicative of the movement of the SX 200.
That MACD sell signal's been there for nearly 2 months now. Lots of trading opportunities in the meantime, but certainly leaning towards the sell.
Would there be a line that you would set if it breaks? You feel like it's going to go down long term?
Right there.
Okay.
Right there, that 6,400 is our line in the sand.
Okay.
Of course, if we cross that line, we've now entered into a primary downtrend based on simple Dow theory. So that is clearly an important level.
Okay. I would agree. That's why I was hovering right there.
Yeah.
So we're looking at definitely line in the sand is drawn here right around 6,400. That's something to definitely keep
The
watchful.
interesting thing about our market is that it's heavily weighted in the banking sector. This particular index, I think about 38% of it is weighted towards the financial sector of the banks. And there's a lot of things, a lot of very good things going on in the background, but certainly our economic outcome, if you like, is will affect the banks greatly. So our index reacts that way.
Ours does too. In fact, I was just reading, and it's a good segue to talk about our banking a little bit. It looks like we have the major banks on Tuesday. Tuesday is a big day. Tuesday are going to be reporting their profits, and it looks like they're going to be down about 1.2% for third quarter overall. How do you feel like that affects the rest of the world and Australian banking?
I think, and I'm a little surprised by that your banking profits are reported to be down. I read very much the same thing, down around 1.5%. So there seems to be a consensus on that. I think the banking community, if you like, is really trying to work out this negative interest rate scenario that we're seeing on a global basis. With particularly around Europe, a number of countries into negative interest rates. Even here in Australia, there's talk that we're going to zero interest rates. We're currently around 0.75%.
Wow.
And some of the more outlandish predictions, if you like, are saying that the US may also head into zero interest rates. I would find that a bit difficult to see, given you have a very strong economy and very strong employment status at the moment. So I think it's more to do with what really is going to occur around interest rate cuts and whether the banks will be able to wear that going forward.
Well, and we've had cuts in July as well as September. A lot of analysts out there are saying that there are more Fed rate cuts to come. So it feels like the momentum is kind of slowing a little bit for us. What that's due to, again, we go back to the buzzword for today, which is trade wars. It kind of has to be there,
Yeah, well, this all that trade wars do is just bring uncertainty, and markets hate uncertainty.
Mm-hmm.
It's as simple as that, and we've got uncertainty on a global basis, and I think the market's really trying to believe the upside here, but there's certainly a lot of events, particularly now in the Middle East, and we've got now Turkey moving into Syria, and potential Brexit going through on October 31st, and the trade negotiations in the US. Everyone seems to report whether they go out for takeaway or not. Seems to be a news event. So markets are very, very sensitive to this.
I would agree. So I guess my question for you is you actually had me write down. I wrote down here to pull up a chart of gold. So I guess my question is it better to be taking our money out of these different sectors and putting it more into futures commodities?
Yeah. Wow. A lot of from where I sit, I hold that gold is in a bullish move. I don't think we have the bull market in gold that everybody wants at the moment. If we open up the gold chart here, let's go to the weekly, Hunter, and really open it out. We take it out. So we can see, if you drew a line across the recent highs at 1550, you'll see that was really the support levels back in 2011, 2012. This is our issue with gold at the moment. We are at risk now of sitting underneath this level for quite some time, I believe. There's not enough evidence in the right-hand side of the chart at the moment to suggest that we have some significant bull market underway. We've had a bullish move. But this consolidation here at the right-hand side and we can see also, while this is occurring, we can see that the relative strength has now rolled over. Now that relative strength has rolled over in line with the price action itself, so there's really not much to see there. We can see that the high where your mouse is at the moment has also put in a new high on the relative strength as well. So there's no divergence to be seen, but we are seeing the relative strength roll over below 70. And MACD down the bottom is starting to go into a swing sell signal. Now, typically this time of year is a strong gold season around India buying jewelry. And we're starting to and that alarms me a little bit that we're not seeing that response in the bigger picture in gold. So the consolidation here is good. 20-period average, we can see that we're retest underway around about the 20-period average, and I would be a little cautious to the upside just yet. I'd really like to see a close. If we go into the daily chart here, we can see we've had right at the top, we've had basically what's called a fake out move. We had a horn reversal. Those three candles right there. Yep, that's your horn reversal. And we haven't seen that taken out as yet. So clearly that needs to be taken out. And right at the right-hand edge, the last 6 to 8 candles, we can see that there's clear resistance at $1,510. Now, that we need to close over that level. We need to close over 1,510.
Yeah, I would say it's a lot of consolidation here.
Yeah.
And this is, it looks like this is a longer consolidation period, or it's going to be a longer consolidation period than the one we had previous, right in the middle of this kind of larger move.
Yeah.
In
July. Yeah, a lot of trade. There's lots of opportunities is in here for the shorter term trader. Absolutely agree with that. But whether if gold has entered into the long-term bull market that everyone wants to see, I remain unconvinced about that just at the moment.
So at this point, Gary, basically you're saying I should take all my money and just shove it under the mattress, put it in the walls.
Well, and then get house insurance. Yeah.
Yeah,
for sure.
That could happen too. All right. And any other
fellas,
stocks you wanted to look at?
I'm sorry, before you move on, do you want to take any questions from chat?
If we have some, we can.
Yeah, Grant wanted to know if we could look at gold versus AUD, which is a euro. I'm not sure what that is, honestly.
Yeah, XAU, AUD. Australian dollar gold, because we have a number of large producers here in Australia. Australian dollar gold has done extremely well, as we have a fairly over time we have a rising gold price in US dollars and a falling Australian dollar, and we're seeing, there we go, that's the one.
So we're on a daily currently, so let's jump to that weekly chart. Okay.
Yeah. So same type of picture in the chart itself, but we're seeing Australian dollar gold trade up around this $2,200 mark. And so from an Australian producer point of view, it's very, very good for our producers. Now, we have the added advantage here in Australian dollar price that as the Australian dollar falls, we'll see the Australian dollar gold price rise basically on a daily basis. So again, if we see, we talked a little earlier about the Australian dollar rising into potentially 69 to 70 cents. So if we saw gold, US dollar gold remain where it is, then we'll see essentially this gold price fall here. And so it's dependent on two things: it's the underlying US dollar gold price and the Australian dollar.
Okay. Wonderful. A couple of other charts you wanted me to take a look at. Hang Seng, or okay.
Yeah, if we're focusing on this part of the world, this is an interesting chart. We can see There we go. Now, the recent highs there back in April, May, the lower high, that's really where the, just forward of that, Hunter. There we go. Yeah, just up there where that island is in April, May this year. This is where protesters went onto the streets in Hong Kong, and we've seen the market pay the price on that as well. What I don't like about this is it's testing the underside of the 20-period average, and again, just a couple of days ago tested the underside again. Sorry, a couple of weeks ago tested the underside again. So clearly in a downtrend now based around this weekly chart. So I would be a little concerned that this may still even find more weakness in here down around the 24 and a half level. That's the big support level right there. Come back and test those levels. We can see the MACD is still swinging down, and the relative strength also remains under 50. You know, you have to become quite concerned if your relative strength is under 50. It really shows a loss of price momentum in a bigger picture. So,
and this has been a significantly strong move for quite some time, and
yes,
this is a pretty major support, that 24 and a half, 2,500.
Yes, it is. And again, this is what uncertainty brings to markets. So this, I would be a little concerned about this just consolidating further, you know, over the next couple of months.
Next chart you would like to look at. We have over here in the U.S. the Dow Jones Transport, or we have Shanghai.
Yeah. Well, let's go with Shanghai, and then we'll come back to the US.
Stay on the same side of the world for a little bit.
And here again, China's slowly declining GDP is showing up in this chart as well. This is just simply consolidation here over a long period of time, and so as China now moves from an expansion industrial nation into basically more of a consumer nation. Some of the figures in China are just staggering about the consumer growth and the number of people that they're moving into cities still, as you know, even in this 2018, 2019 period and going forward into 2021, they're talking about literally moving millions of people into cities to support this economic growth. So this market, it's simply consolidation here as China works through all of this very, very big picture economics, and we're not really seeing anything of any interest in the chart itself other than consolidation. Now, that's a good thing. I think it's a good thing. We're not seeing it sell off, so the market's not telling us that we're going into some terrible period, but just simple consolidation here. So a lot going on in this part of the world outside of the US from an economic point of view.
Which is kind of interesting that, you know, again, that buzzword, the trade war hasn't really pushed this down at all. It still stayed pretty consistent in that consolidation mode. So I think that is good news, that you know, the tariffs haven't pushed the economy that far down, at least.
Yes, yeah, it's very good. So relative strength sitting around 50 on this index, and MACD really sitting at a neutral point as well.
Mm-hmm. So if we take a look here again, more of the same. Pretty much.
Yeah. So in the daily chart, you can see right on the right hand side there, with a couple of upticks in there, testing the average. This is a reasonably good look. I don't think there's any legs in this because our MACD, of course, is still swinging lower. But on the and this only leads. This is why I would look at something like this and say, look, we've only got consolidation here. It's all good at the moment. There's nothing terribly bearish about this chart. You've got a relative strength that's swung back to 50. You're testing a 20-period average, but your MACD is really saying we've got slowing momentum. as well. So, yeah, that's your big resistance level. So simply a channel trade in this type of index.
Yeah, there's just not a lot of room right there.
Yeah.
Between the current movement and the first, I would say your first resistance is right here. Second one obviously is going to be right here, the high in April, but that was a pretty drastic move after it hit that high.
Yeah, and you notice the outside range right at the top of the market up there. It's always a trend killer, is an outside down close bar, particularly on a weekly chart, is always the killer of major moves. So it's history now, but we need certainly need to break above that 3,050 level to challenge that.
Well, let's hop continents, get one last look at a chart in here, Dow Jones Transit.
Yeah, now, so I monitor this very closely, this transports chart on a weekly basis. And this really needs to confirm, basic Dow theory says that this needs to confirm the major indices as far as trend goes. So essentially in this transports chart at the moment, currently what I like about this is we saw the sell-off in December last year and a recovery out of there. And since then, in basically July, September, and November, we can see there's three significant lows in price, those three spike lows. Now, while that was occurring, the relative strength really held up. We didn't see the relative strength make any sort of moves, dramatic moves lower. And this really stands out also in the NASDAQ. We see the same type of three-low pattern, but we had a very strong bullish divergence in the relative strength. But this does need to confirm the broader markets. And we're seeing that the major indices now are almost back to their all-time highs. But this is really not buying the story just at the moment. So I'd like to see the transports really trade above the 11,000 point level, or close above there, certainly on a weekly basis. And if that occurred, I would get very, very bullish on the markets.
Okay. Yeah, it looks like, this sideways movement, very large bars though, for weekly bars, very large bars.
Yes, but in the recent three lows, they're really pipe reversals. We have two side-by-side candles showing a clear reversal on each one. And currently this week, an inside week so far this week. That's a good sign. Our last bar on the right there. So we have an inside range this week and closing towards the high. So that's a reasonably bullish sign coming off the lows of last week.
Okay, let's take a look at the daily. I don't know if you take a look at daily charts for...
Yeah, so there's our island bottom right there. We're at risk. You notice that looking back that the transports does close its gaps. Its price gaps open. There was one back in August right there where your mouse is. We saw it closed 2 days later. And currently we have a gap open from last night's from today's price action, I should say. I would consider that at risk of being closed. So any sort of news around this trade deal that's not appreciated by the market may see that quickly closed. On the upside of this, with the three lows in place, we are seeing the relative strength now move back to 50. That's a good sign. And we're seeing the MACD also starting to swing into a positive buy signal as well. So closing on the 20-period average, not a bad thing. But don't be surprised if we saw that little gap in the back there just closed.
Wonderful. Two last things from you, Gary.
Yes.
The week ahead, when we wake up Monday morning, we've already discussed that there are a couple of pretty large events coming next week.
Yep.
What should we look for market-wide for the week ahead?
Wow. I think when you look into, there's two things going on at the moment. The very strong, the gold market is very sensitive to news at the moment. And a lot of people saying that, look, we should be in a significant gold bull market, but it's really the gold market's not playing that yield inversion story and debt level story, that type of thing. It's really not being priced into gold. So we're seeing equities or indices, particularly US indices, start to trade towards their all-time highs. This next week will be telling to see if could we bring up a chart maybe of the S&P there, Hunter, and SPX, and let's.
You want to look at it on a weekly?
Yeah, weekly's fine.
Perfect.
So here we are with the lows of last week also being a higher low right at the right-hand side here. So the market's not in any, we've got a little bit of volatility, but the market's not in any great distress at the moment. Now, this week's candle there with the higher body in the range is generally a bearish candle when you find it at a higher price, when you find it in higher price areas. So if we look back at the top of April, May, you'll see one back there where you have a small body in the top of the range. That's quite a bearish candle when they show up in the weekly chart. And so you could almost be convinced that on the right-hand side of our chart now, we have a bullish flag starting to form with a higher low. We've had a retest in the low. Now that low down there was recovered very quickly last week. Last week's low was recovered very quickly, and so this market really doesn't want to sell off at these levels. Let's go to a daily chart, and we've also, you can see that the relative strength is over 50 as well. And again, the relative strength heading back over 50 on the daily chart. A big gap out last night. So like the transports, don't be surprised if that was closed out, that gap. And we're starting to see the MACD almost head into a swing buy signal in there. And so I think this market's really looking forward to more upside rather than any sort of strong sell-off at these levels.
I definitely think so. It was a strong day today for the S&P, big gap, but looks like the bears kind of pushed it down towards the
into the close.
And
you wouldn't be surprised about that, considering the amount of news that may come out over the weekend. There'd be a little bit of risk off into the close today, and we've got that little gap behind today to fill as well.
Are you thinking we're going to see a lot more of this in the coming weeks? A lot more of this sideways movement?
No, actually, no, I don't. I think because seasonally, October, a lot of people take the view that October is a bearish month. The statistics don't back that up. In fact, 70% of Octobers end up as a positive month. Some terrible things have happened in October, I agree. But statistically, October, around about 70% of the time, ends up as a positive month. November is a more bearish month than October is. So seasonally, right now, we're entering into a seasonal bullish phase. And so don't be surprised if we saw the tops around 3,030 taken out or tested and taken out over the coming weeks.
Oh, that's great. Last question for you.
Yes.
Do you have any stocks that you're watching specifically for this next week?
Well, in the US market, there's a number of it's really interesting in the US market. The retail stocks are doing incredibly well at the moment. As a sector, they're doing quite well. There's another small stock, Celgene, is also a primary trend. The data company, let me just refer back to my list here. The data company Digital Realty, which is a real estate trust based around data centers. That's also looking very, very good. The ticker on that is DLR. And also in the retail or in the food sector, Lamb Weston, LW, and then of course, as I mentioned, Celgene, CELG. So there's a lot of opportunity in the market.
Okay, wonderful. Oh yeah, that is looking at digital realty right now.
Yeah.
Taking a look at that on the weekly market. Strong
It's
bullish
trading,
momentum.
all-time highs out there, and it's looking quite good. So there is if you hunt around and look around your charts, and there is a lot of opportunity at the moment.
Wonderful. And if not, home insurance and stick the money under the mattress like we were talking about earlier.
Yeah.
All righty. Well, that about wraps it up for our market roundup. Special thanks to Gary. Gary, you're a wonderful contributor to us. I hope that we're going to have you on here multiple more times.
Thank you, Hunter.
If you want to get a little bit more familiar with Gary's work, he actually created an add-on that is included in MetaStock. It's called the Haguro method. For those of you who have MetaStock, check it out. It's really great. Otherwise, once again, thanks so much to our guest, Gary.
Thank you, Hunter.
To all of you, have a wonderful, safe weekend and a wonderful start to next week. And as always, happy trading.